welcome to Couple Bowl. My name is Michael Dunham. I'm the Director of Planning here at Fontana Financial Planning, and we are in our new studio. We've got a new setup going, so hopefully things will look a little better than they have in the past. With me today is Patrick Fontana, founder of Fontana Financial Planning. Welcome.
Cheers, Michael.
Cheers. Patrick, today I want to talk about a topic that's near and dear to our heart, gifting to our kids. And so I want to kick off the conversation by talking about one topic in particular. So we left our previous firm to start Fontana Financial Planning back in 2020. At that time, you became a business owner. You started this business. And so we had some unique opportunities that before, when you're just a W-2 employee at a company, didn't necessarily have. So I'd love to talk starting off about some of the cool ways that you found that you can now gift or pay children as a business owner.
Absolutely. So it's definitely a topic near and dear to our hearts. And I've got 4 kids, and I have read a lot of financial planning articles and done research on, like how do the smart folks do it, right? So one of the things that we talked about is putting kids on the payroll. And once they're old enough, which in some businesses, financial planning practice, orthodontists, dentists, kids quite young, including your almost 2-year-old Trip, you can pay them, say, a modeling fee, age appropriate. So maybe not a huge amount of money, but paying Trip to be on our website, our Christmas card, our, kind of advertising material. And then when you do that, you have earned income. So say it's $2,000 this year that we pay Trip. Trip can then fund $2,000 in a Roth IRA, this tax-free forever. And I know you've done the math on some of those projections where, what does that do for Trip by the time he's retirement age? It's a ton of money. Also takes some money from potentially the top tax bracket and lowers it to the 0% tax bracket. So kids on the payroll is one thing. Getting them started education-wise is a huge thing. We're big on teaching kids about money. We do a Finance 101 series that we have on our website, and we've done several of those individual kind of training calls with kids. I know custodial accounts have some limitations, but it's a pretty awesome way to give money to kids from grandparents, even non-business owner kind of situations. Just gifting money to kids that are young is totally a smart thing to do. And if you were going to pay significant taxes on the gains, we can transfer that to potentially 0 with the kids.
Yeah. And so to kind of walk through a couple of these examples and the tax impact of doing that. So starting with adding your kids to the payroll, like Patrick talked about, they do have to do legitimate work. It needs to be age appropriate. But let's say you have a business owner who's in the top tax bracket and they're able to hire their kid and pay them $10,000. So I'll use $10,000 to keep the math simple. Top tax bracket this year is 37%. If that child has no other income, they will pay 0 taxes on that money. That saves them $3,700 in taxes as a family right there. When you add on top of that, it gives them income that qualifies them being able to fund a Roth IRA. That's where it can become very powerful because now you've taken money that would have been taxed at 37%. You've eliminated the taxes and you've given them the opportunity to put it in an account where as long as they don't touch it until they're 59 and a half, it grows totally tax-free. And we did the math on a 12-year-old. If a 12-year-old funds a Roth IRA with $7,000 and they grow that until the age of 65, and if it returns 10% per year, so it's a good return. But in that situation, that $7,000 contribution would be worth $1 million at that point in time. And so you eliminated the tax and you created this account that's $1 million tax-free for them at retirement in one simple move. When we talk about the custodial account, where it becomes really cool is custodial accounts have an opportunity where if a child is earning no income, they can realize up to $2,600 this year in income or capital gains and pay no taxes on the money. And so that's always the biggest encouragement from us is don't fund your child's custodial account with cash. Use appreciated stock. Use your most appreciated stock. If you do $2,600 or less of appreciated stock, they can sell it and there's 0 tax bill associated with them selling it and then using the proceeds to diversify or buy some names that they would want to own and want to learn about as well.
So real life example, if you had, say $5,000 of Amazon that you bought for $500. If you sold it yourself, you'd pay long-term gains on almost all of that. Versus if you said, hey, I'm going to gift 2,600 of this Amazon to my kid, and then they sell it, no tax bill.
Exactly correct. And then I'll take that one step further. The other tax move that can be really powerful that we love to do when it's possible is when that child gets old enough to where the account becomes theirs. So in Texas, generally that's age 21. At that point in time, a custodial account has to be moved into the name of the then minor. A lot of times, those kids are still students in school where they're earning no income, but they may have some big gains that have built up over the years, right? Like if they received, call it $10,000 of appreciated stock that got diversified over the years, and maybe that's grown to $30,000. What that does is it gives us the opportunity to potentially realize that gain in the 0% tax bracket. We call it resetting the basis. So essentially, if their income is below the threshold, they can realize all of those gains and pay zero taxes. And then we can turn around and buy the investments right back if we want to. But now we've reset the cost basis on the investments at $30,000 as opposed to the 10,000 that it was beforehand.
And I know we've done that several times, recently with, every one of our clients' kids and grandkids that are at that age where, they're junior, senior in college, are about to go out in the working world and hopefully make some real money. We'll hit reset on their accounts as we're updating their account from being a custodial account to being their own account at age 21. So it's a common, smart thing to do. And it's a great way to be helping our kids get a head start on life.
Absolutely. Well, thank you so much for joining us. If you are watching this, we'd love if you continued to tune in. We really appreciate that. And Patrick, how do you want to finish?
Rebalance until rich.
Rebalance until rich.